impressive is really just the roster of the products they have rolled out in the last, call it 3-4 months, and especially what they have in store for the next, 9 to 12 months. So sometime back last year, they rolled out Topics, which allowed people to now follow topics instead of following people. That immediately drove user engagement, user growth. They launched Fleets, which is kind of the equivalent of Instagram stories or Snap stories. That also is showing some traction. They're launching subscription. They're launching an equivalent to Clubhouse, et cetera. And that's on the consumer side. On the advertiser side, whereas before, it was really hard for advertisers to advertise against this 200 plus million users, it has become a lot easier. They've revamped their new ad server. They've revamped their new map products, which focuses on mobile app promotion, et cetera. So we think that finally the stars are aligning where they have the right advertiser or the right products for advertisers, while at the same time growing users and user engagement. So we're pretty excited about it.
So is this more an engagement growth story than it is a growing ARPU story, or a bit of both?
Oh, it's very much both. I mean, look, relative to a Facebook, this is a very, very, very small platform, right? At 200 million, they're finally starting to get the scale to get a lot of advertisers. But relative to Facebook, this is maybe 1/10 the monetization of Facebook. So they still have plenty of headroom. They still have plenty of opportunity, but it's really their war to lose in a way, because what they need to do now is increasingly show to advertisers, whether they're direct response advertisers, which they only have 15% of the revenues generated from, or SMEs, which typically don't advertise on this platform. It's really their job to try to convince as many of these advertisers to come onto the platform. But, the book has already been written. We saw Snap do this a couple of years ago, and they've done a great job at it. We saw Facebook do it 8 or 9 years ago. So it's really more of an execution story as far as the ARPU and as far as getting more advertisers on board right now.
But what about the regulatory risk? I mean, we saw Jack Dorsey and other tech CEOs testifying again in front of a new congressional composition last week. We've got Lena Khan, looks like, coming in at the FTC. I mean, could there be a regulatory crackdown? Absolutely.
I mean, that's the biggest risk. But to their credit, this is not a Twitter risk. This is a risk to the entire social platform environment, whether it's Facebook or Google or Snap or these guys. So our view is the regulatory framework is going to keep evolving, right? Section 230 is probably going to be rewritten. The question is, how and to what extent these platforms will still be protected under Section 230. But we think that's already baked, honestly, into a lot of these valuations. I mean, we like Facebook, we like Google, and we like Twitter. So, and relative to other smaller cap names, these are some of the cheapest names in our space, whether you adjust it for growth or not.
All right. Well, your upgrade certainly sending shares of Twitter higher today, up about 3%. Yusuf Scully, thanks for joining us.
Thank you, guys.
Shepard Smith here. Thanks for watching CNBC on YouTube.